Hey there, everyone. This is Chad Pavel, CPA here. I'm going to walk through the SBA Disaster Loan Assistance website, which is being updated consistently each and every day, and show you what is involved in the application process and help you determine if you're in an eligible area, which at this point is just about every single state. We expect official confirmation that all 50 states and most counties within all 50 states will have eligible SBA funds allocated to them. So just keep in mind, the biggest thing to note is that the SBA disaster loans actually come from the SBA funds themselves. The SBA, part of the government, is actually granting these loans and will be servicing these loans on behalf of the borrowers, which are small businesses here in the U.S. Now, this is different from your typical SBA loan, which actually comes from banks and is guaranteed by the SBA. So this is completely different. Banks do not lend the disaster loans. Now, they're still granting traditional SBA loans as well, but we fully expect that most of those funds will be tied up since they actually come from the banks. So the SBA Disaster Loan Program actually comes from the SBA. So you'll apply directly to the SBA. You do not apply to a bank. That's the first thing to note. Second, let's just go through some of the eligible disaster areas that we're seeing right now. And today is March 22nd, Sunday at 4:10 p.m. Eastern. And so let's just go through. And we've seen right now there's 43 states that have officially adopted the SBA loan program for disaster loan assistance. This actually comes from the governors who need to apply, and then they will ultimately assist in getting these SBA loan applications processed on behalf of their state constituents. So as of right now, all 50 states have some form of SBA loan assistance. Now what you want to look for is coronavirus COVID-19 incident. So as you can see, almost all of the states have this already. Let's just go through a few. So if you live in, let's say, Nevada, we click here. This is the Nevada region. You can see right here, they actually list all of these different states in the area. But in Nevada specifically, here are the counties. Here are the other counties in the Nevada region that are also being impacted by and actually will be eligible for SBA disaster loans. You can see all of the different counties within these various states as well. So what I suggest you do is first just go find your state here on the list. Let's go to Connecticut. That's where we're located. If we click on Connecticut, you can see we click in. And in Connecticut, we've got 1, 2, 3, 4, 5, 6, 7, 8 counties. Massachusetts, here are the contiguous counties as well that are tied to the Connecticut region. So if you're in these areas, you're also eligible. Let's just click on the fact sheet so you can also see what other information they're providing here to Connecticut residents. All right, so this is the Connecticut Declaration, and this came out, this was updated on the 16th of March. All right, so here are the new terms. The loans, let me just zoom in here. So let's go through what is actually involved and what you need to have as far as credit and collateral to get these loans. So, as you can see, economic injury disaster loans are those that are available right now. We are not in a actual geographic or physical disaster, meaning there's been, as we can see, at least in Connecticut, they're not granting money for natural disasters. There's been no hurricane, no tornadoes. Now, some states like Tennessee recently got hit with a tornado. So we can take a look at Tennessee as well, which may be eligible for additional funding. But right now, those who have been impacted by COVID-19 are going to be applying for economic injury disaster loans, which are working capital loans to help small businesses, agricultural cooperatives, small businesses engaged in aquaculture, and most private nonprofit organizations of all sizes that meet their ordinary and necessary financial obligations. If you cannot meet those obligations as a direct result of this disaster, then you may be able to apply for this loan, because these loans are intended to assist through the disaster recovery period, which as of right now goes through the end of 2020. All right. So credit requirements, credit history. Applicants must have a credit history acceptable to the SBA. Now, they're not giving specific numbers, but what we often see is credit scores of a minimum of 640 and up. If you have a low credit score or a poor credit history, you can very likely apply with a co-borrower. Perhaps it's your spouse, your business partner, a trusted relative or friend may be able to co-sign and co-apply on this loan with you. So make sure you have that conversation, even if it's difficult. This will be a good way for you to get over less than ideal credit history and actually get this application processed. Repayment. Applicants must show the ability to repay the loan. So what does this mean? Well, on your tax returns, and if they request additional information after you apply, you need to show that you're covering the debt. Meaning, the SBA will come back to you and look at your financial history, tax returns, current year financials, and they're going to look at the forecast period also. They're going to see and ask you, can you repay this loan? And they'll be able to tell you, if we give you a, let's say, $100,000 loan, your monthly payment will be X. Let's just call it $1,000 a month, just for sake of the conversation. If your loan repayment, principal and interest, is $1,000 per month, you must show that you have additional cash flow after operating expenses of at least $1,000 per month plus a premium on top of that. We call that debt service coverage. And so that needs to be at least 1.25. So if the loan is $1,000 per month, you need to show available cash of at least $1,000 times 25%. So that's $1,250, right? So 1,000 times 1.25 is $1,250. So what that means is your cash flow needs to show at least $1,250 a month after all expenses in order to be eligible to cover the service, to cover the debt service. All right, so we can certainly help you run that calculation, but that's the rough number, is 1.25 times the monthly payment obligation of the loan. Next is collateral. So collateral is required for all economic injury disaster loan assistance over $25,000. So you will need to post collateral. They can take real estate as collateral. They will not decline a loan for lack of collateral, but the SBA will require the borrower to pledge collateral that is available. So again, it's sort of a gray area. They're not going to necessarily turn you down for the loan if you have no collateral, but you do need to show that you have some sort of assets as collateral. Examples would be equity in real estate, in your primary residence, in rental properties and commercial properties, equipment that has residual value, receivables that have value, stocks and bonds that obviously have value. Now, we obviously realize that so many of these assets may have been already depleted or declined in value. So we're really hoping that the SBA will be lenient on the credit and the collateral requirements that you will need to post. So just keep in mind, preserve cash if you can. Make sure your assets are available in order to get this loan, and make sure you gather the documentation ahead of time. Interest rates. The interest rate is determined by formulas set by law, and it's actually fixed for the life of the loan. So the maximum interest rate is 3.75%. Now that right now is pretty favorable. It's right around, it actually might be a bit lower than the mortgage rate right now, depending on your credit. So that's one good thing. The loan terms. This is very favorable. The law authorizes loan terms up to a maximum of 30 years. It's pretty cool because most SBA loans are typically 10 to 20 years at most if there's real estate. They're offering 30-year term loans. That's very generous. That means you have 30 years to pay back the loan that you will get if you apply for this EIDL loan. The SBA will determine an inappropriate installment payment based on the financial condition, which in turn determines the loan term. So again, that could mean they might give you 7 years, they might give you 10, they might give you 15, 20, or even 30 years. So again, this is all based on your ability to pay and how likely you are to repay the SBA over time. So again, very favorable terms at 30 years. Next, let's look at the loan limit. So the law limits these loans to $2 million for leaving economic injury caused by the disaster. The actual amount of the loan is limited to the economic injury determined by the SBA. So you need to show the SBA when you apply that you're very likely to face economic injury of X dollars. And the goal is obviously for you to forecast this out in a realistic scenario and then get as much, if not a little bit more from the SBA to cover your most realistic loss. And that's going to be the most important thing. So they'll be able to grant you this based on the economic injury determined by the SBA and your materials and the conversations you have with them after you apply. Less business interruption insurance and other recoveries up to the administrative lending limit. So what they're going to do, and in the application you'll see, they ask, do you have business interruption insurance and how much does it cover? And they will make that determination of how much to lend to you based on your economic loss minus how much business interruption insurance proceeds you will receive. The SBA also considers potential contributions that are available from the business and its owners or affiliates. So do you have additional cash on hand that you could put into the business to supplement the SBA loan? So that's why they look at your personal financial statement. They're going to ask you how much stock, bond, cash do you have available in your personal accounts. So if a business is a major source of employment, the SBA has authority to waive the $2 million limit as well. So that means they can actually break the $2 million limit and give you more if you're a major source of employment. So if you are employing dozens, if not hundreds of people, and you absolutely need this loan, they can lend more than $2 million to you. So keep that in mind. A couple more things here. Loan eligibility restrictions, non-compliance. So you need to comply with the terms of previous SBA loans. So if you've taken out an SBA loan in the past, they're going to have to see that you've been compliant, that you've paid the loan back, that you're still in current payment terms, and you haven't defaulted or abused the loan. If you have, it may be very difficult for you to get a new loan under the disaster program. This also includes borrowers who did not maintain required flood insurance or hazard insurance on SBA loans in the past. So make sure that you're current and compliant. All right, a few more things here on this page. Loan applicants should check with agencies or organizations administering any grant or other assistance to determine how an approval of an SBA disaster loan might affect their eligibility. So if your county or if your state or heck, even if your town has additional grants and support they're going to give to businesses like yours, and if you've already specifically applied and received funds, they're going to also determine how much more you can possibly get. And do you need additional SBA loans on top of the other grants or assistance you've already received? So they take a holistic approach of your cash flow and other available funds to see if this is truly your last resort. All right, refinancing. So economic injury loans cannot be used to refinance long-term debts. So you can't just take a loan out to refinance your mortgage or, senior secured loans you already have out. This is in addition to those. So you can't repay those and refinance using this debt. It's not meant to be a refinance loan. It's meant to actually help you cover working capital needs for the next couple of months to couple of years. Also insurance. So to protect each borrower, they may require you to obtain insurance. If you don't have business insurance already, I suggest you talk to your broker to get insurance. Borrowers whose damaged or collateral property is located in a special flood hazard area may purchase and maintain flood insurance. The SBA requires that you have minimum thresholds here of that flood insurance. So what they're saying is if we give you this loan, you need to have enough insurance to make sure that further disasters don't reduce your cash flow or hurt your business even more if you don't have the insurance protection. So again, talk to your broker or your insurance agent now and make sure that if you have a need for this insurance that you do get it as quickly as possible. And so that's really it for the additional declarations in the state of Connecticut. Once again, I suggest you go to your state selection here on the website and that you actually select your state and you go through and you download the fact sheet to make sure that you're going to be compliant. So check out all of these different things as quickly as possible. And obviously, if you need support, we've included a link below for us to help you. All right. Now, what else you'll need here if you apply is you're going to need some other materials. You're going to need tax returns. You need a personal financial statement. And you need to have your business and individual tax returns filed through at least 2018. If you have 2019, that certainly could help as well if it shows that you have a greater profit than you did in 2018. So we hope this helps, and we wish you the best.